Hello, 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 hello,
There
hello.
you go.
We okay?
We were dancing earlier. I muted you.
Are we on? I love you. Sorry, guys. Hey, we're here. Hello. I love you. Mic is off. No sound. Mic's off. I love you. Yeah. Seth is mute. Your mic's not working. Thanks, everyone. We working now. I love you. How embarrassing. You're right. It's totally my fault. Thanks, Lily. Lily's always there to call us out. I mean, guys, we hear you. We welcome you in all over the world. I see you in the Netherlands, Norway, Portugal, Lithuania. Those of you in the Southern Hemisphere, wherever that is, we see you. We welcome you in. And you guys are incredible. I want to welcome in, of course, Paul Gabriel. Is it something like that? How are you, Paul?
I'm wonderful. How are you, Uncle Seth?
I'm good. We're going to have Tracker Mo throw a share on it. Tracker Mo, how are you with the Bidnast Nation?
I'm great with my Bidnast Nation.
I hear that sound too. A very annoying sound. Let's try that, folks. Something's not correct. Has a weird sound. Yep.
I hear the most annoying sound in the world.
There's a pause. Okay, Paul. I hear you. Bidnast. I hear that. You hear that? You hear that sound? That little chirpy. It's like we're playing an April Fool's joke on you right now. Let's try this. Guys, I love you. Let me figure out this sound just a smidge. Hold on a second. Hold on a second. Let's try this. I still hear it. I hear the crickets, Paul. Well, I'm here, guys. I'm here. Okay, guys. Yeah, I see it's my mic, Beth. Thanks. I see it. I'm gonna work on this mic while Paul's talking. Paul, why don't we get right into it? We welcome you all in. I'll fiddle with this mic. In the meantime, Paul, tell us about the Nasdaq, folks. I'm gonna fix it right now. And yes, I'm wearing the lumber section.
Well, I actually want to give a quick update on the Everything Money software.
Please do. Go ahead.
I've gotten a couple of people saying, hey, why is the site down? It's not down. If you saw in the Discord, I wrote a note to the Patreon announcements, and I said...
To be fair, I said it was down.
Oh, well, Don said it was down.
It was down for maintenance.
So what it is I took it away because I was getting so many of the exact same bugs. So the first 30 or 40 were great. Afterwards, it started being a lot of repeat, which is awesome because I want people to be able to replicate bugs over and over. So I was very happy to see it was the same. In fact, of all the 80 or 90 bugs that got reported, I literally think 40 of them, half of them were the exact same bug. So I'm very happy about that. So I took it down. I will be giving it back to you guys around April 1st to break it some more and do some more to it. Maybe sooner, I don't know. And then April 15th, we'll have a real live version for you guys to start. And guess what? There'll still be bugs then. But it's going awesome, guys. I just hired 2 more developers. We're at 3 developers now working on this. The next thing that's going to be done is the app. And then I'm also working on anybody who's a patron now. At some point in the future, we're going to want to transition off of Patreon to our own site. That way it does the automatic, etc. And I'll be giving a discount for that. I'll probably be giving a 3% discount or something like that for people transitioning over. We're going to have higher fees. The reason we're transitioning over, we're going to have higher fees on the credit card part, but not on the Patreon part. And we're really trying to build the Discord. So the website's going great. It's going to keep getting better and better. So I appreciate the patience. But Mo is smiling for a reason. Did I say something?
No.
Anyways, the website's going awesome. I really appreciate you guys' patience on it.
Mo, what's going on with your life and the day trading? Talk about what you're doing this week, what you're doing in the mornings, and tell people what they can look forward to.
So Monday and Thursday mornings from 9 a.m. to probably 9:45. I talk about the market, kind of what I do before the market. We look at the different news of the day, what's coming out that day. It's been great. We're getting great participation, so I love it. So you guys keep coming to it. In my chat, we traded Cardinal Health yesterday, and I don't know if we're making money on it, but it's a long-term hold. So that's kind of what we're doing right now. We have people that are in my group that have said that within 1 month they've paid for their entire year subscription of the Patreon, and they don't even have the software yet. This is crazy. So this Patreon thing, it's crazy. The people that get access to me and you, Paul, is great, but the people that just rave from the lowest tier that are so happy just to be in the Discord alone, they don't even have the website yet. It's incredible. Join the Patreon now because the price is going to go up for all 3 tiers, and this is awesome.
How's the mic going, Seth? You change mics? Yeah, most live stream guys, check it out in the mornings. He's getting record numbers every week. I mean, today he had 160 people live at one point. Almost 1,000 came through. It's a great live stream. It's a great way. So the reason we like the momentum in the charts is it doesn't matter what the market is. You can still make money in any market using charts and momentum. The momentum I have as one of the developers is building the back end of the momentum for me. It's going to be, again, a great way to make money in any market. It doesn't matter if it's up or down. the thing about value investing is value investing does better when markets are down. So you got to be patient. But just like you guys, I want to invest my money. So I started doing the momentum. I love it. It's going to be a process, and it's going to be an epic way to make some money in good times and bad times.
So it's funny, I had somebody that came into the chat late last night. They work all day. They came in and they were like, so is the reason that we bought Cardinal Health because they have good free cash flow and this? And he started going through it, and I said, no, Cardinal Health just was the innocent bystander. That's all their chart looked like this to me. I saw them coming up through the sweet spot yesterday. I saw this great engulfing candlestick, and my bid and ask was 2 cents or less.
Please don't say it like that.
Bid and
Say it
ask?
the real way.
How do I say it?
You said your bid and ask.
Oh, the bid and ask was 2 cents, and it was just like, man, I can't pass this up. But the point is, I don't care what the stock is. As far as I'm concerned, I don't care about the stock price at all. Don't care. I don't care what the ticker symbol is. All I care about is the bid and ask price and this sweet spot. The engulfing candlesticks, they tell me when to add. Besides that, those are the only two things I care about.
Folks, I'm back in. I'm sounding, as always, very sexy and debonair, and I'm hoping that cricket sound is gone. I just had to switch out a couple mics, guys, so I apologize for that, but we're back. Paul, real quick, before we get into the Nasdaq trading, can you talk about, I know your stance on IPOs, but there's a lot of hype around Roblox. Is there even a way to address or assess such a new company?
Yeah, of course. They're going to provide financials before they go public. As part of the going public process, it's disclosing everything you've done in the last few years. But if you look at the history of IPOs, they tend to not do well. The job of an investment bank, when they're taking a company public, is to go on a road tour. And they literally go around hyping the stock as much as possible. They want that stock price as high as possible because their fees are driven by that. So you have to keep that in mind when you're looking at it. To me, I'm the kind of investor who says, listen, let the company be. Let the company fall where it falls, and I will buy it when it's a good value at some point in the future. You don't need to jump on every single IPO in the world. You want to trade them? Sure, but even on trading momentum and charts, you still need some time to pass, a month or two, before you see what's going on. Like in our momentum trading, we need 60 trading days before we can make our decision. So my opinion on IPOs is it's a hype. It's the ultimate of hype, and they tend to not do very well. So there's plenty of ways to make money in this world, guys, that are better values. If you want to learn on hype and momentum, just stick around with the channel because we're going to be doing momentum at some point this year where we're going to really show how you can get momentum going. If you just want to do momentum in general, Mo and I have back-tested 100-day versus 300-day moving averages. Was it 100-day versus 300?
Yeah.
And when the 100-day goes over the 300-day and you buy on momentum, you tend to outperform the market over long periods of time on a basket of stocks. So if you really want to do that, go do it that way. But in terms of individual companies and IPO, I don't believe they're going to go. They're probably going to go down. Just wait till the company is more established and has all the high flying things have fallen to the wayside.
The SEC put out a story this morning that we talked about on the morning show. They are telling investors, be very careful with these SPAC IPOs. And don't just jump into them because celebrities like Jay-Z and A-Rod and Serena Williams and stuff are backing them. So even the SEC is
Serena Williams is backing it?
Yeah, she's in something. I don't know what she's in, but she was one of the...
Well, she must have been paid a pretty penny.
Shaq was in one.
Shaq was in one?
Yeah, Shaq was in one.
Shaq's in everything, right?
Yeah,
of course.
yeah,
Shaq makes more money
great marketer.
now than he did back when he was in the league.
Basketball, yeah.
Let's see. Paul, someone was asking, can you guys give both an update on GME and your thoughts on this craziness, the daily craziness, the in and out of GameStop?
So GameStop went up 40% and then down 40% in the same day. Am I right on that one? Just the other day, it went up 40%. They halted trading, went down 40%. Something crazy like that.
It went down 40% in 15 minutes.
Yeah, 15 minutes.
15 minutes.
Guys, this is not fundamental. This is everything but fundamentals driven. More power to you. You made a bunch of money on it. I love it. You're the greatest. Oh, it's a 257 right now.
Yeah, I can go back to that.
It's way too volatile for me. I love watching it because I think what did it hit, $50 recently? It was at $50 as well as $50 recently.
Yeah, it was that day that I went and bought it. It started the day before at $45. Then I bought it at $100, and then it just kept going. Now it's what, $260 a share? This is crazy.
Shaquille O'Neal did indeed stay in Paul's house for a year.
How did that happen?
Right, Paul? You let him stay there. Is that what you're saying or no? How did that happen?
What's the Shaq thing? How did this?
He just
thing come
broke.
up?
We were talking about Shaq, but yeah, did
The
this,
Shaq's a
we
celebrity name in the IPOs.
So
Yes.
when I was in 2009, I built my house. March of 2009, March 21st, 2009, I moved in my house. And 3 months later, Shaq got traded to the Cavs. And I have a basketball court in my house. And somebody had a connection to Shaq, and they called me that morning and said, would you sell your house to Shaq? I said, no, I wouldn't sell it, but I'd rent it if he was interested. Fast forward 4 months later, and all of a sudden he rented my house. I stayed there for 8 months and 2 days. I met Shaq one time, and it was in 2015 during the playoffs. It's the only time I ever met him. Talked to him on the phone a couple times. His assistant and I still speak every so often. He's a nice guy. He actually kept his Northeast Ohio phone number. And yeah, that's it.
You've also had dinner with Scottie Pippen, right?
I have.
Tell us about it.
Well, I was trying to buy a sports team back in 2006. And there was a connection to Scottie. His ex-wife is from the Middle East, and her father and my father are friends. And I wanted to buy a sports team, so he was very nice about it. Like, I called him, he answered. I talked to him about this idea. He said, yeah, let's meet, come to Florida. And I said, okay, what hotels do you recommend? He goes, don't get a hotel, just stay at my house. And I'm like, yeah, I'm not staying at your
Shut the
house.
front door.
Yeah, he did. He was just like, just stay at the house, you're family. I'm like, well, I'm not family, but I never met his wife at the time. And
You turned that down? Too awkward?
yeah, what am I gonna do? Stay in their house with them? I had never met them before.
I stay in your house all the time.
But I've known you for how long? Anyways, fast forward, we didn't get a deal done. We were trying to buy the Orlando Magic, and it didn't happen because they didn't sell because they got a new arena deal.
We're going to talk about the Nasdaq today. This is very tech heavy, right, Paul? And we want to take suggestions straight from you guys. So I know if I open that up, here come the comments. They'll just start pouring in. Paul, we've even talked about maybe looking at Tesla now that it's down, it's up and down a bit.
It's back at $700, isn't it?
Go ahead, Mo.
I mean, this morning I was watching CNBC and I was like, they flashed it across the screen. I'm like, whoa, I thought the Tesla was just at $500 a couple days ago. Is that not right?
What's it at right now?
$695.
So guys,
March 8th, it was 562.
yeah, it's 695.
Man.
Remember I kept saying it quietly fell like 40%?
Yeah.
It literally quietly fell 40%, like nobody was paying attention. Guys, the Nasdaq is always gonna be hyped up, big tech companies. Tech is the most exciting. But now you're finding that the older tech companies become the new blue chips of today, right? So like the big companies like Intel, Microsoft, soon to be Google, Apple soon to be, even Apple, it's not selling for some crazy valuation metric. These are going to become the blue chips. The tech companies that last become the blue chips. Now, I do want to show something. Can I show this on the live stream?
Please do.
So guys, first of all, these are my adorable dogs. Keep looking. I got to find this thing. Keep talking. I got to find this thing.
I see all these companies coming in. I obviously, if you've been an OG homie, OG patron for a long time, I definitely drift toward your suggestions. So I would like to look. We have had a ton of suggestions for Corsair, a company called Corsair. Nick is asking for 1-800-Flowers, and I see everyone filling them in. So I will try to do the best I can at looking at some of these and getting your suggestions in. I knew if I open up the floodgates, they would come, and here they are.
Okay, let's just start doing the Excel sheets on my computer upstairs, and
Okay.
Mo didn't pay for the remote PC, so I'm screwed.
Okay.
What's our first company?
Well, if we want to stick in Nasdaq, we can do something like a Tesla or an Apple or a Microsoft.
What do the people want?
Well, Nick is saying 1-800-Flowers. Is that Nasdaq?
Let's look it up.
Okay.
I don't know. Let's see. I know-
FLWS 1-800-Flowers.
That's Nasdaq.
Okay, this is FLWS 1-800-Flowers. Paul, you are sending flowers as an apology a lot. I
Oh
would
yeah,
assume.
a ton, and just to random people too. I'm just like, listen, hi, I probably offended you at some point.
Here's some
I'll
flowers.
offend you flowers.
Or I'll offend you in the future.
Yeah, that's a great.
Yes, I either have offended you or I will offend you in the future. Here are some flowers.
And it might very well be during this show. So
Here's an autographed picture of me going like this.
okay, let's do it. What is the market cap for 1-800-Flowers?
By the way, can I make a comment? I have used 1-800-Flowers and they make it very easy. So that's my personal endorsement.
You really have used that, of course. I knew
I
that.
have.
Yeah, of course. Go ahead. What is it?
$1.7 billion market cap.
Wow, okay.
PE 16.4. Check mark there.
Wow.
Profit margin only 5.6% X. Now remember, guys, I have talked about this. I will probably be changing the first two pillars of our 8-pillar analysis to something else. Because as you guys see, I don't really pay attention to the PE, and the profit margins just depends on too many businesses. So either way, No dividend here on the company. In the last 12 months, they've had $250 million in free cash flow. So off the bat right now, I immediately draw my attention to, holy cow, $1.7 billion company, $250 million in free cash flow. What is that? 7 to 1? That's 7 to 1.
So guys, so Paul asked for, I never know if Paul's asking rhetorical or actual. So he'll ask some crazy calculation and look over at me and I'm just like, hell no.
Crazy calculation, it was 1.7 billion divided by 250.
When you don't hear it.
It's 7, oh, that's right, you didn't hear it. So the price to free cash flow in the last 12 months is 7. That immediately gets my attention no matter what. I'm going to be like, okay, I need to go look further into this company. And it's not matching the PE, but that's okay. Let's go figure out why that is.
Okay, so we have a check and an X. Let's do revenue growth over the past 5 years. This is pillar number 3.
Okay, revenue growth. Oh my God. 900 million, 1.6 billion. So obviously in 2020, a lot of people were apologizing for a lot of things in 2020.
That's because they had to live with their significant other for months on end.
I thought you were going to say something else more morbid, that people were just buying it because of condolences.
That's a good one, though.
Llewellyn is correct. Make sure we're tickling that thumbs up. Now, Paul, step aside and show people these beautiful baby shorts and those gymnast.
I love these shorts. These are bamboo.
Gymnast legs.
You guys like my skater shoes?
I
bought like 4 pair of these. I love skater shoes.
I could have swore I saw
Skater boy.
an engulfing candle coming out the front of that. But okay, let's go to, so great revenue growth. That's incredible. How about profit is pillar number 4, baby cakes?
Profit. Okay, guys. 27 million to 104 million.
Jeez.
Now I'm starting to understand why the trailing 12 months free cash flow ratio was 7. They had a monster year last year. The hardest part about companies that had a monster year last year because of COVID shutdown, do I think that they're going to go back to low numbers? No. But do I think it'll be a blend somewhere in the middle? Yes. I don't think people are going to permanently use this. So part of your conservative approach is to not give full value for the previous year's cash flow or profit. I do believe that. So, shares outstanding.
Shares outstanding is pillar number 5. Did we? That was it. I'm sorry.
Down about 1%, so it's a check mark there.
Check mark for shares. How about current assets over current liabilities?
275 million in current assets, 233 million in current liabilities, and liabilities total of 543. So I like this. It's pretty solid.
So we have all checks besides profit margin?
Correct.
Okay. Pillar number 7 is free cash flow growth.
Free cash flow. And luckily, because you have the Everything Money software, it's going to give you the free cash flow number without you having to calculate it yourself. Because if you're like Seth and your head blows up whenever you have to use a calculator to type in 3 digits at a time.
Again, we're looking at 1-800-Flowers. This is ticker symbol FLWS. Go ahead, Paul, with that free cash flow growth.
So we went from 193 million to 254 million. So look at this. Why did it have 100? That's a big year there, too. All right, Seth, you ready for the other 3 numbers?
Go ahead.
36, 47, 69.
That was it? Wow. Okay.
Yeah.
Divided by 5. The average free cash flow is 120, Paul.
All right, so guys, this is what we have to discuss here. 120 million. The company is 1.7 billion.
Look at
for the
that.
last 5 years, the ratio 1.7 billion times 120 million is 14.6 or something. I don't know. What's the number? Something like that, 14.6, 14.7, whatever the number is. It's not bad, it's a check mark. But the question, as part of your being a smarter investor now, is to sit there and say, why are there such big fluctuations in free cash flow? Look at the previous 5 years to that, 4 years to that. These are fluctuations, and that's why we take longer periods of time when we look at numbers like this, because anything can, okay, what was said?
It's not about you. It's about Seth.
Here and there.
He cut to Seth and blank stare.
We just have so many great fans. Like, listen, you know damn well that like
They notice such detail.
they notice the detail when I'm standing here looking like a freaking idiot, and then Don keeps the camera on me, and I'm picking my nose or like looking at you like, what in the hell are we even talking about? And then somebody in the chat's like, by the way, what company is this? And I'm just like, how do I tie all this together? So yes, I was standing there like an idiot when you asked me questions, and Don quickly cuts it. I'm like, I don't freaking know. You're doing the math. I love you. You know I love you.
I love you, I love you, I love you.
Go
It's
ahead,
like my
Paul.
mother.
Go on with your thoughts. So.
The questions you need to be asking is, why for the inconsistent cash flow? I think we could explain last year, people are going to be buying online way more. So I look at that saying this is fine. But the previous years, would I take 120 as the average? I don't know. That's the hard part. You have to decide what your real average is. Do you go back Do you go back 10 years? I mean, look at here's the thing. Their revenue in this 2016 was half of last year, and yet their free cash flow wasn't double. So you just gotta, I don't know, these are the questions you need to be asking. Do I like it though? I like 1-800-Flowers. I liked it a while back. I looked at it a while back. If you think online buying is gonna be going even higher for flowers like that, make sure you're paying the right price, but I don't see how this is
Gonna go away?
I mean, to be honest with you, I think to myself, Amazon buys them. I immediately think to myself, Amazon buys them.
You've said this before because like some of these food deliverable companies that are worth, $2-3 billion, you're saying it's just dropping a bucket toward Amazon.
Well, yeah, look at Amazon going for $1.7 billion, they could own a great brand name. I mean, who knows? If you ask me right now, Paul, where would you buy flowers from online? What am I going to say?
Flowers.
I was going to say, I don't even know where to buy flowers in real life. I mean, I have to Google it, drive around town.
And when you Google it, what's the first thing you're going to find?
100
flowers.
I see 100 flowers.
And they're going to have same-day delivery at some point. So I'm looking at going.
They have next day delivery.
They have next day delivery for like $15 extra.
Yeah, I actually did a next.
Trust me, it depends on how mad you made the person for how fast you get the flowers there.
I see, of course.
That's true.
Why don't we head over to
$50 if you have to.
Let's head over to Dr. Momentum with the Bidnass Nation and the Everything Minions about 1-800-Flowers, ticker symbol Don. Put a ticker symbol up in the top left, and people are loving that, Don. The FLWS, 1-800-Flowers. Go ahead.
So,
go ahead, Mo.
I'm glad we're doing this one because this is explained. I talked about snapbacks this morning, and I could emphasize it again. So back in this time frame, January, you turned into a short, and you moved right through the sweet spot. Could have shorted this all the way down. Now, you're in the oversold region, but your red line is still under your yellow, so you're still a good short. You see the last couple days, the price is increasing on you. This is what separates good traders from bad traders. You would look at it and say, oh my God, I'm getting killed on the price. I need to get out of this thing. But if you look at your trend, you have beautiful trends still going down. This is what separates good traders from bad traders. If you are short on this, stay in your stock. If you want to, you can kind of reduce your shares on it. But when you see snapbacks, it's not a time to get out. It's a time to recognize that you're getting a good pattern that's going up on you. You're creating that M formation that I talk about. And now you can come down and break this previous low. And that's where you can keep making your money. Also, your bid and ask is 4 cents.
You know damn well we love that bid and ask. Paul, final take on 1-800-Flowers.
I say pay attention to it if you like it and you think, if you do more research and think their growth is going to stay sustained here, and this new level is probably a permanent level, I don't see how you're going to go wrong on this one. I think it's a reasonable company, reasonable price. Now, as a value investor, am I buying it a lot lower? Of course, I'm going to buy it a lot lower. But I don't think I don't look at the numbers and go, oh, this sucks. I look at the numbers going, okay. And I do think that a company like Amazon or a company like Walmart or somebody who's trying to really own some sort of space to get people to would be buying this company, especially at $1.7 billion. That's literally a drop in the bucket for Amazon.
Okay, that's our take on 1-800-Flowers. Thanks, whoever suggested that. Was it Nick? I love you. You know it. Okay, yes, Kiko, you are correct. We are going to do Corsair, ticker symbol.
Hang on a second.
Go ahead, Paul.
Oren asked the question.
Go ahead.
I feel like the only good time, not a question, a comment. I feel like the only good times to buy this company would be near Valentine's Day. I hear this a lot. People think, oh, when should I go to the major events? First off, people die every day. Secondly, people get in fights all the time. So guys are always gonna be buying flowers for their wives or girlfriends, whatever. When you look at Valentine's Day, even though it's a surge in sales, in stocks, you have to look at the same period the previous year because you want to see how does it perform relative to the same time last year. It doesn't matter what time of year it is, it's how well that period did compared to the previous period. So it's a great comment that you made because it brings this all up. But we're in a world where they come up with reasons to buy flowers pretty much all the time. Now, are Valentine's Day and Christmas and Mother's Day going to be higher volume? Absolutely. But unless the volume is way higher than the previous year, you don't really care what time of year it is. Just like, remember when I was in college, a friend of mine said, Paul, you should buy Budweiser before the Super Bowl because people drink a bunch of beer. I'm like, yeah, but every year during the Super Bowl, they drink a bunch of beer. So it's about how does the new year of this year do compared to the same time last year? That's what we're always looking at in stocks. You want to look at now versus the same periods in previous years and how they responded.
And if you want to do event-driven stuff, that's where you can use charting, momentum, that kind of thing. That's where you can take advantage of those events.
Yeah, A. Bitler said the real question is Paul going to piss off more or less people in the future? So I think this is a huge growth stock in terms of you pissing people off, Paul. My wife said I've only gotten her flowers once in 22 years.
Ouch.
that hurts.
Ouch.
I was
I
not.
just wrote divorce.
I was not aware. I was not aware of that. Okay, that's a tough one to take here on the
Best
show.
was the other day you said something. Your wife said like, "Yeah, we broke up several times in college," and you're like, "I only remember once." She's like, "Okay."
I can't remember the last
Move on.
5 minutes. So, okay, should we move on to the next stock, Paul?
Yes, let's do it.
A lot of people are asking for Corsair. Ticker symbol, Don, is CRSR. Let's look at this guy. This is a gaming company, computer hardware company, commonly referred to as Corsair, is an American computer peripherals and hardware company headquartered in Fremont, California, founded in 1994. And I don't know anything about
just went
gaming.
public.
Oh, it just went public
Yeah, it
recently.
just went public
Is there much of an analysis out of you, Paul? What do you think?
September
Let's see how many years of
2020.
income statement we have. 2 years of income. Oh my God, look at the revenue. It's huge. The revenue jumped up big time in the last year. Is this the one that it skyrocketed because everybody was like at home going like, wait, is this the one where you make your own games? Or that's the Roblox?
Roblox just came out yesterday.
Yeah, and that's the one that you make your own games, right?
Yeah, that's right.
So what's Corsair doing? Listen, there's no free cash flow to look at. Is there? There is free cash flow, 52 million. It's selling for a lot. It's selling for 60 to 1. Guys, remember, I like to look at companies that have a history we can analyze. There's no history here. I will just tell you that in the last year, they did $60 million in free cash flow with a $3 billion market cap. That's 60 to 1. Not exactly exciting for me. Revenue of $1.3 billion. So it's not a super small company where it's like $100 million that can grow. It does seem light that 1.3 billion in revenue would only generate in the software world 85%. So what kind of when they say gaming, what's their gaming? Don, you're our gaming expert here.
Well, Don doesn't have a mic today, but we have some people saying they sell mice, keyboards,
Oh,
computer
it's
components,
gear.
So think of Razer.
streaming equipment,
Oh.
computer hardware. They also say that our friends meet Kevin and Jeremy from Financial Education. They talk about these a lot, but what's to talk about? Just
It's hype.
Hype, baby.
hype.
I mean, look, it was $2.36 on October 29th, and now it's $35.
I guess we're not saying ignore these things, but
I'm saying ignore this one.
oh, you are.
Because I look at it saying, but what's the purpose of it? Like, what does it really do?
And can I go from a technical side?
Please
Yeah.
do.
The problem that I see, this is why I don't do these ones. You're like just recently, this little turquoise line here, that's your 100 days. So it didn't reach 100 days until middle of February. There's not enough information here for me to trade off of. This is as zoomed out as I can get. So I've said it before, I'm going to say it again. Looking at this is like, looking at a chart is like a whole book. That's why I want so much information. This is like chapter 1 of the book. So I need more than that to go and make confident trades on this.
I do like what you're saying, Mo. There is a playbook that we're trying to provide you guys with, a little bit of guidance in decision making. And when we get these new companies where who knows where they could go, there's so many videos on like these are going to go to the moon, and then when they don't, they look kind of foolish. I think, Paul, you wouldn't want to look too foolish that often, right? I mean, right? That's you know what I mean, like.
Well, yeah, I mean, nobody wants to look foolish. There's no reason to buy this. What did the stock hit? $50 on Mo? What's that peak?
Let's see here. 51.37.
And it's already at 33.
Yeah.
Look, if somebody had bought it, if you chopped out that chart and started it at $50, I mean, somebody would have looked at it saying, look at this, it's parabolic growth. Great, and then you'd have been disappointed. Does that mean it doesn't go up higher? I don't know. I just look at it saying, hardware is a lot harder to make money in. It's harder to make money in hardware than it is in software. That's the thing. That's why the margins are so low. I'm avoiding it. Let the track record flow a little bit. Let it get a few years under its belt. I'd rather go buy the proven winner at a discount than buy the hype that could grow to $100 billion. I'd much rather miss this at $100 billion than go buy the other 100 that will make sense, that look good and they don't make sense.
And Paul made a great point. Like back here in this November area, look at this growth. This looks like it's becoming something. The problem is I don't know where. There was no support line. Like there's a support line clearly right here, but it's not over here because there's nothing there. So there's nothing for me to say, oh, the support line is going to fall here. Because if I would have seen this over here, I could have said, there's a likelihood that this is going to drop and hit that support line. I didn't know that. This to me just looked like a great buy, and I had no positions, no support, resistance, anything to base it off of.
All right, that's our take. We appreciate you guys tickling the thumbs up. If you have a moment, whether you're on your phone or at home, make sure you tickle that thumbs up as always. Paul, I have some of our great patrons have given me some suggestions, and I'd like to get to them. QCOM. QCOM is a ticker for Qualcomm, is a semiconductor company.
You
yeah.
don't know Qualcomm?
I'm not incredibly familiar. I
Really?
I had this on my list for a couple days ago, and
Your kiss.
and when I watch Mo in the morning, do we call that show Mo in the morning or
Oh, that's a great idea.
Jesus? What
It's,
are we doing? Mo
What is it called, Don?
before the morning bell?
Before the
And we
morning.
need to
bell.
have like a Mo in the morning.
Yeah,
something
like a little
that.
like a daytime. Yeah, Mo in the morning. I love that. But Qualcomm. So I have seen it on his show.
Or
People-
like moan in the morning.
Okay.
Definitely have the disclaimers just to make it stink.
Let's look at Qualcomm, Paul. This is a American multinational corporation in San Diego and Delaware. We're in Delaware. Intellectual property, semiconductors,
Hi.
software,
I'm in Delaware.
and services related to wireless technology.
Does anybody know where that's from?
No.
Hi.
You don't know?
Or you can be magically whisked away to Delaware. Hi, I'm in Delaware. Don, do you know where that's from?
I've heard it. I honestly
Let's see if anybody knows
I've never
it.
even heard it.
They're all too young. I can't believe I'm
Let me
saying
just
that
Google
now.
it.
I know.
Wayne's World. There you go,
Wayne's World.
Don.
Don,
Thank you
you're the
very
winner.
much. Danny, Wayne's World.
Great.
Wayne's World.
Paul will be sending
Wayne's
you
World.
a cash
$1 million.
reward. Yep, go ahead, Paul. This is
$150 billion market cap.
great. This is Qualcomm.
PE of 22. I want to make note that Qualcomm was selling, I mean, look at this, 70 a year ago. Look at this profit margin though, 25%. That's incredible. That's a good profit margin. Chickadee check. Even though we're probably removing the profit margin from there, I still like seeing these big profit margin numbers because I look at the chip industry. These are high margins with a higher barrier to entry. Same as Microsoft, same as Apple, same as Google. I mean, yes, you can create software anytime, but the amount of money it would take to get people to fully switch over is so difficult that I like these margins on higher barrier to entry. This is what Warren Buffett would call a moat of some sort. I'm not saying this is a moat, but he looks for good margins that have higher barrier to entry in the sense of to get people to do a full switch over. Now, I haven't done any research on how hard it is to switch away from Qualcomm. This isn't a consumer business, it's a business to business business. Like companies are using Qualcomm chips for their products, correct?
Yes.
Excellent. Okay. Free cash flow, 6.3 billion. Dividend yield of almost 2%, and they're eating up about half the free cash flow, a little bit under half. So, okay, by the way, look at this. Return on assets, 19.6. That's a big number when it comes to the little book that beats the market.
Return on assets?
Yeah, I look at return on invested capital, which we're going to be adding here shortly, and that might be the new metric. But it shows how they're making money on their assets. Return on invested capital talks about how they're able to reinvest money at a higher rate.
Yeah, news to me, Paul is going to be changing two of the pillars out, which I'm already confused at the 8 we have. So as we move forward, we'll be confusing me even more. So let's go to revenue growth, pillar number 3. While Paul texts his girlfriend, get back on the show here, Paul.
By the way,
Let's
she
go.
did message me that she is watching the thing right now.
How nice.
And by the way,
Paola.
please sign up for the Patreon. This is like we're gonna keep doing this. This is the software. You'll get it. It's so
Paul,
funny.
you almost just kind of get fed up with yourself when you talk about the Patreon. You're like, all right, just this is
Well,
ridiculous.
I just don't
Just-
get why people even have to think like, oh, should I do it? Should I do it? Like this is crazy. Like if you take anything having to do with money seriously, you should sign up for it.
I guess you're right. Go ahead, Paul. This is-
23.8 billion to 26.7 billion. So that's a check mark there. And it's a mature company. That's why you don't see a lot of growth. I mean, look at 2012. They did $20 billion. And they had a big jump. They probably made an acquisition. So either way.
That's a check for revenue. And Paul, you love maturity, mature women. Pillar number 4 is profit growth over the past 5 years.
4.9, 6.7. And look at this. They had a big negative the second year. I guarantee that's a write-off of some sort.
Okay, that is, wow, we got 3 out of 4. Now, the PE was only 22, so we're almost at 4 straight checks. Pillar number 5 is shares outstanding. We want this going down, Paul.
It is going down. Again, this number is not accurate. We're still working on our data feed with Morningstar. I love Morningstar, but they're the worst at responding to emails. So this is not an accurate number. It's actually 1.5 billion. It's divided by 4. So 1.5 down to 1.12 or something like that. So it is a check mark there.
Okay, you want to do free current assets over current liabilities?
Well, I mean, that's the next one, so we probably should do it.
For now.
20 billion.
Oh my gosh, Goldie says, how many pillars does Paola have, your girlfriend? Good Lord. A lot
good
of
question.
pillars, yeah.
She's got good pillars. Wait, what are we talking about? $20 billion versus $9 billion. They have plenty of cash. And the great thing is their liability is only $30 billion on that $20 billion. Now, one of the things that you have to do, the reason somebody once asked me, why don't we look at your debt to equity? Because it varies from industry to industry. That's where profit margin, I think I look at, like, okay, is there a lot of debt with a low profit margin? That concerns me all the time, but the debt to equity is something you should look at, but I don't have it as a pillar.
Pillar number 7, Paul. You love this one, which is free cash flow growth. Again, folks, we're looking at Qualcomm, ticker symbol QCOM.
5.9 billion, 6.3. Check mark there. Seth, please tell me you have your calculator out.
Yeah, 6.3. Keep going.
4.4, 1.8, 7.
7 divided by 5. The average free cash flow over the past 5 years is 5 billion, Paul? 5 billion. 5
The thing I like
billion.
about this, guys, is they had a really big drop in 2018. So I like the fact that we're factoring in a big drop. And even though the previous years were, boom, whatever. So 5 billion times 20, which I think is a high multiple, but we'll get into that, $100 billion.
You think the multiple should be lower for this company?
There's arguments to be made about why we keep it at 20. One, big random year of 1.8, big drop. In previous years, very consistent. So consistency can also make you want to pay a higher multiple. Pay a higher multiple for growth, consistency. There's all these factors. You can justify a higher multiple for anything, but it's about this is the art of investing. Where do you feel this multiple should be? I feel for a company like Qualcomm, I think I feel comfortable paying $100 billion for this company with this big anomaly of a year with a big drop in free cash flow. The company is currently 200 and what billion?
150 billion is the market cap.
150?
Dark Knight is saying in 2018 they got blasted with taxes or something.
We can check that out. That may be true. 150, guys, this is close. Under $100 a share, I'm buying this thing.
Come on.
Yeah. In fact,
Go on.
maybe at a higher price because they're buying their shares back aggressively. So remember, when they're buying their shares back aggressively and they have a high return on assets, this is pretty good.
Puts, baby.
What are you
Yeah, I
saying,
think we
Mo?
gotta look at the
It's
puts.
$132 right now.
Oh, so I thought it was $150. I'm sorry. So, but still,
Yeah,
a
but
third
that's
is
even
still
better for us.
Mo, you do your thing. I'll
Pull
put
up
the
an options
puts.
chain. Okay, so, whoops, I should probably erase that, huh? So this is a perfect example of what a dog stock is. Somebody mentioned power stock. That's not right. You need to go back and watch the Trading 101 series.
Well, for Seth, tell Seth what a dog stock is. It sounds funny when you say it.
I'm going to tell you right now. So if you look here, this stock, it went through the sweet spot, it went down, and it got to the bottom of its trend line, and it just keeps going sideways, 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 and the price just keeps coming down, down, down. Eventually, that's going to stop. Eventually, big institutions are going to come and start pouring money into the stock. They're clearly not doing that right now. So the big hedge funds and all your money managers and this and that. When they do that, this trend is going to turn up on you. This red line is, I should just use red. This red line is going to turn up on you and go positive. This is the perfect reason, and the reason that I started saying that you need to buy a tracker share because of stocks like this. Because you can just buy one share at $132 and just wait and wait and wait. And when this thing does turn up, you will be able to catch it right when it crosses that 32% line and starts making green engulfing candlesticks. Perfect dog stock. Go buy a tracker share. Everyone should do this one.
And the options here suck.
Damn.
Why is that?
I knew
Paul?
they would. I mean, you're getting no return. Let's say I want to buy it at $100. So when I'm selling a put, I'm picking a date in the future, in this situation, April 16th, and I'm picking a price, $100. I'm going to get paid around 30 cents per share. So 30 cents on $100 is 0.3% I'm going to make in the next 37 days. So basically, I'm getting a 3% return per year because 37 days is 1/10 of the year. So I'm looking at going, hey, it's better than having cash sitting around, and I do like the Qualcomm stock, so maybe I just do it just for yield. And I go, okay, I'm fine with that, but that's what we're looking at here for Qualcomm. You can go out in the future further. You might be able to pick a date in the future, like, let's pick.
Go 3 months out.
What's 3 months? March, June?
June
at $100 a share is $1.58 was the last trade.
Okay.
So now you're looking at how much of the year? 100 days, so 3.6. So $1.60 is 1.6%. times 3.65. Actually, that's not bad. What does that return?
Is it $100?
$100. The
Over
last trade was $1.58. So here, guys, if you go out further, 100 days, the last person got $1.58. The current midpoint is $1.34.
6%?
I mean, that's about 6% right there.
That's not bad.
That's not terrible, but when you go out further, the risk you take is something changes in the meantime.
Right.
So I haven't done any research on Qualcomm. This is definitely one we need to go read the 10K for. Because we don't understand, are they losing business on anything? Is there any major part of the business that's falling? Remember, usually when stocks are a good deal in a booming market, there's a good reason for it. Not being overlooked is not one of them. So let's pay attention to that.
This is a stock to go do due diligence on.
Yes.
Remember, this is the screening out process. We just screened for it. We found something. Now we're going to go do the due diligence.
Interessante, you guys. This is incredible. We thank you all for your support, of course.
We have a record number. I just saw 387 people watching at one time. Let's get to 400, guys.
400.
Don't leave the
Congratulations,
chat. Don't leave the room.
Just let it run in. Who cares? A moment of likeness, of course. We appreciate your support. Paul runs the numbers on our Patreon count, and it's completely absurd compared to other channels out there about how many patrons we have. Literally, of like, Paul, what are some of the numbers of people who subscribe and then become patrons?
Well, this month, ready for this one, guys? 20% of our new subscribers became patrons.
There are other channels that have less than 2% are patrons.
Yeah, we have 1,403 patrons out of 22,800.
So we hope, guys. The point of me bringing
That's
this up
6%.
is we almost feel like YouTube is like our jumping off point for you guys to join our community and be a part of us, and we connect with you guys. And so apparently there's a great value in there, and the software is coming out in a month. Paul, is it a month quite yet? No, I mean it's just it's a lot. It's just we just thank you. It's so wonderful.
Can I pivot a little bit here?
Go ahead and pivot, baby.
The Nasdaq. Let's go back to the Nasdaq conversation. Look at this run up in Nasdaq. The Nasdaq in 1998 was 1771. This peak right here was 5,000. This bottom right here was 1,100. This was all hype stocks, and it fell 80-some percent. This is crazy. We're at 13,403. Do you see this big jump from the bottom of last year to here? It's like doubled in a year. It's all been based on Tesla, Amazon, Netflix, and these are all great companies that make great products, but the stocks are overpriced here. So you have to ask yourself, are we looking more like 2000 or 2003? I think anybody would sit there and say, listen, based on valuations, we are definitely closer to the 2000 level. The weighted average price to earnings ratio on the Nasdaq right now is 35, I believe. Actually, let me look it up. I think it's right down here.
Can you make that screen a little bigger, by the way, as well, Paul?
Maybe.
Thanks. Make sure you guys are tickling that thumbs up. You know, our patrons know how to tickle it, but just reach down there and give a little love tap. We love you. What do you think?
So let me see what the current PE of the current Nasdaq PE. The current is 40 as of December 31st. How much is up since December 31st? Right now, the Nasdaq is up year to date 1288, so 5%. So call it, right now the Nasdaq PE is 42. Guys, that's really high. That's really, really high. And I think the Nasdaq 100, the top 100 stocks in the Nasdaq, even though it has a lot of non-crazy stocks in there, that's going to fall the hardest. In fact, I regret shorting the S&P, and I wish I'd shorted the Nasdaq 100. So the point I'm trying to make it, and by the way, I'm not recommending anybody short the Nasdaq or anything, but I'm just trying to show you guys where we are in history relative to value. And I just look at this saying, this is an uncomfortable feeling for me, where something's going to have to happen at some point. Something will have to happen. So anyhow.
Great, guys. I appreciate all the likes out there. We appreciate you guys watching. And of course, our patrons. I like you a lot. I mean, maybe love is too much, Paul. Maybe I say too much. Maybe I'm using it too much, Mo. But no, forget it.
Kind of your shtick.
I love you. You know I love you. Okay, we are going to do, this was on the radar for TraderMo the last couple days, Paul, and other people, some of our patrons are saying we need to look at ENVA stock.
Let's do Intel after this one.
Enova International, ENVA, Don. ENVA is the ticker. This is Enova International.
What do they do?
It's a headquarters in Chicago. What do they do? What do they do?
Oh my God, we looked at this company before. I noticed the name. Remember this PE of 3? We did this one before.
That's okay. Let's update it. This is an international.
I mean, we literally did it like 2 weeks ago.
Is that true, Don?
At this point, I can't remember.
See, I'm with him. Let's look at it, baby. People are asking for it. It's happening, Paul. Just get on the show. Just get on board. Get on the Everything Money train. It's happening, whether you like it or not.
$1 billion in revenue.
What's the
3
market?
PE.
What's the market cap? I'm so sorry.
$1.1 billion.
Just 1.1 bill for
Free cash flow of 840. That's a price of free cash flow of 1.4 or something. 1.3. Okay. Good profit margin. Check on the profit margin, 35%.
And check on the PE. Wow.
I mean, it's a 3 PE, yes.
Okay, revenue growth is pillar number 3. Don't upset the talent. Nick is right. I'm sorry, Paul.
744 to $1 billion, check mark there. But in 2019, it did $1.1 billion. So it's declining from 2019. Net income, okay, something happened here.
Profit margin. This is pillar number 4.
No, net income. 35 million to 377 million. Revenue's not up that much. So they must have had some big jump in something.
Take a look now.
We're gonna look right now.
What are we missing, guys? If
Special income right here, 163 million versus losses the previous 3 years. Anything else? That's consistent. Consistent. Other income and expenses, another 164. So that's $300 million. Yeah, there it is right there. So guys, I wouldn't go off of this. I would ignore all of last year.
Oh.
So let's skip the balance sheet. Cash, 1.25 billion. Yeah, they have plenty of cash on hand to pay off all their liabilities. Let's look at the free cash flow.
did you skip shares? I'm sorry, Paul. You're jumping a smidge.
Oh, I'm sorry. Shares outstanding.
Please do. Pillar number 5 is shares outstanding.
Decreasing. Check mark there.
Check mark.
Check, please. So guys, if you see, I just completely ignore shares outstanding because I immediately see some big jumps in numbers, so I want to go get right to the point there.
Sorry about that. Pillar number 6 is.
Oh, no, I'm not saying it's a bad thing. I'm saying that's my thought process.
Great.
Yeah, I should still look at the shares outstanding, but I was like, man, how did they go from 40 million profit to 375 million? I wanted to make sure I understood that. I saw 2 lines above that showed $320 million in profit that wasn't supposed to be there.
So for Enova International, I have 5 straight checks. Does that make sense?
Yeah, it sounds about right.
Okay, pillar number 6 is current assets over current liabilities.
Already said that one, check mark.
That's 6 straight. Let's go to free cash flow growth over the past 5 years. I'll get my calculator so I can mess up this calculation.
Holy crap.
Go ahead, Paul.
Why is their free cash flow so high?
Hey.
Let me make sure this data is right. ENVA. I'm going to go to my backup here. Cash flow statement. What the hex? It is right.
Wow.
Okay, guys. Free cash flow over the last 5 years. Ready, Seth?
Yeah.
365, 390, 588, 804, 841.
Can you do them faster? 841.
365,
I got
395.
it. The average free cash flow is $600 million. 600.
Guys, well, here's the deal. I won't even get into that one. It's $600 million. Look at the previous 5 years. They're all 250, 300 million bucks.
What does that mean? Is that good or bad?
That's good. It's
great.
selling for 4 times free cash flow even in 10 years ago.
You're right, Paul.
What do they do?
Okay, we got to look at this now.
What the heck do they do? They're based in Illinois. Online financial services. Oh, that's why we didn't look at this one.
What's that?
Remember, it's loans. It's like banking. That's why. The numbers on banking always look way. You have to look. I remember this now. Remember, guys, when it comes to banking, their standards are a lot different. When it comes to loans, you don't look at them from a free cash flow basis all the time. I'm not saying this isn't a good deal, but you don't look at it just from free cash flow because every bank. I mean, if I look at FMMB, which is a bank I've done very well on, I think their numbers are incredible as well. Farmers National Bank. Mm-hmm. I mean, their cash flow is $36 million a year.
Mike is saying that this is a small business lender.
Is it high interest?
Do they do payday loans as well? Someone's saying.
I don't know, but it could be the case.
I would say if you're watching this in the future, you can check the timestamps below. We do put the ticker symbols and timestamps where they are located in the video. We just can't obviously do it live, but we will be doing it. It's in our old video. So check that out if you're watching this later. We love you. Keep going, Paul. What do you think? So, I mean, where are we on good Lord, $600 million in free cash, market cap of 1.1 billion.
Man, the thing that stinks is, even Mo's even nodding his head. I don't know what to say here besides those numbers sound very enticing, but this is where I know my confidence level of banking. It's not high. Even though this sounds awesome. I mean, buy a few shares maybe, but I don't know what they do. Read the 10K. Even compared to Farmers National Bank, though, their numbers are better.
Right.
What's the price to book on this bad boy? The book value is the balance sheet. The book value recently is 339 million. So the price to book, is that right? See, there it is. There's our catch. Our price to book is 4. That's pretty high.
Paul, someone's saying we do need a guest speaker on the show one day who is an expert in banking and oil. That'd be interesting to have.
The one banking person we know that's an expert, he cannot come on.
No,
Well, guys, if anyone knows somebody, you're all over the world. If you know somebody that we don't know, put it in the comments, and maybe we'll look into these.
By the way, I spoke to my friend Gary yesterday, and I appreciate you guys. I said to him, I go, hey, has anybody reached out to you? He said a few of our subscribers have reached out to him. Gary once said to me, I once went to Gary and said, Gary, I want to learn banking. I want to learn how to analyze a bank. He goes, I have no idea how to do it. He goes, and be honest with you, Paul, I've talked to bank CFOs. They don't even know how to do it. Like, it's a very difficult world. He put us in touch with somebody who seems to understand banking very well, but he works for a private fund, and he's not, like, he wasn't even allowed to share a screen with us to show his model. He couldn't even share a screen to show his model. That's how what are you laughing about?
Daniel said, don't even look at free cash flow for this company. And someone said we should just call Kathy Woods and have her on. I know you love her, big fan of her. And her age range for dating.
How old is she?
I mean, she looks like she's...
Guys, we're so close to 400 people watching.
Mo, let's go over to TraderMo. 400? 400?
Nice. Yeah, we said 400.
Congratulations, guys. It's appreciated. Oh, that was way too loud. Sorry, guys. Mo, let's go over to your Bidnass Nation, the Everything Minions. Talk about what the heck are we doing? Enova, ENVA. Talk about it, baby.
So I said earlier that the other one wasn't a power stock. This one is a power stock. So what is a power stock? You're over all 4 of your major moving averages, the 25, 50, 100, 200, and you are making new all-time, let's say 52-week high. So this is an 18-month chart. That's your 52-week high, and you have surpassed that. So now what do? What we do is you can so the problem with buying power stocks like this, and that I need to really emphasize, is the ideal time to buy a stock is in this sweet spot. And I call it the sweet spot because that is where you have the highest probability of making the most money. When you get up here into this overbought range and you just keep going sideways, I made the analogy earlier today. It's like going to the cookie jar and you're grabbing the crumbs. Why are you not grabbing the cookie in the sweet spot? So right now, it's hard for me to tell somebody that's not in this stock to go and buy this for the first time. If you are in this stock for some reason, all you have to do is wait for an engulfing candlestick, make a brand new all-time high, 52-week high, and you're Gucci.
You're Gucci, man. So I had a great question asked of me just now. Somebody asked me, what do we look for in price to book value, essentially? So book value, guys, is you have a balance sheet. The balance sheet has assets, liabilities, and shareholders' equity. Shareholders' equity. Okay? Basically, book value is your shareholders' equity. Okay? Assets minus liabilities is your book value. And assets should equal liabilities plus shareholders' equity. Because if you think about it, if you have $100 in the bank when you start a company, it can only come from borrowing the money or putting in yourself, which is your shareholders' equity in there. So that's how it works. Now, book value, I don't necessarily look exactly at book value because companies like 50, 60 years ago had a lot of book value. They had assets. They had a lot of... Now, companies that do generate a lot of cash and keep it inside, they're increasing their equity. What I prefer to look at is book value growth. That's what I care to look at. So look at how, over the years, the shareholder equity grows in a company. Because the company is going to grow in equity based on cash coming in, going into the bank account. Because when money comes into the bank account, it has to go to net income. Then from net income, when it's kept in the company, it's retained earnings. I'm getting too financial about it, but the bottom line is book value growth is how you're going to look. Essentially, by the way, Warren Buffett believes this. Book value growth is what, in the long run, the company should basically grow at, is how the book value is going. So I look at book value growth as a more important factor into a company as opposed to the actual price to book value. I use the other metrics personally to determine value, and price. The book value growth is the more important part to me. That makes sense?
Yeah, we're getting a lot of people with their thoughts on this company. Someone's saying they do non-prime loans, a huge red flag. Yeah, interesting.
Yeah, so
Final
either
take
way,
on Enova.
I mean, we're back to a booming market again in terms of economy. I think the unemployment rate's down to 6%. I just think if there's a long withstanding recession or something like that, it's just, I mean, I don't understand the market, that industry very well, so I'm going to avoid it. But I'm not saying that is, I mean, those numbers are still very, very attractive numbers. So do what you want with it, learn more about it, but I'm not doing it for me because I don't understand. And that's the discipline that I have. If I don't understand it, I don't touch it.
Do you think this will be the new pillar, Paul, this price to book?
Not price to book.
Zip and Jimmy asked.
I think return on invested capital is something I like more than price to book value growth, because you want to sit there and see on ROIC how much are they able to take their cash and invest it at higher rate of returns, right? And I'm going to be looking at 5-year return on invested capital. So what I'll basically do is return on invested capital. Let's just talk about it right now. Return on invested capital. What I'll take is, I'll take the net income, net operating income over the last 5 years, because I want to take an average, and divide it by total, what's it called? Let me get the exact name of it, because it's weird on balance sheets how they write it. Let's see here. So right here, guys, current debt and capital lease obligations plus long-term debt, which they don't even have it on here for that company. So it's current debt and capital lease obligations. So current debt plus long-term debt, LT. And that will equal a percentage. That percentage over long periods of time is about how much the stock should grow if you buy it at reasonable prices. Because it's basically saying, let's say this number was 15%. And by the way, I'd want 15% or more. So if it's 15% or more, if you buy it at a reasonable valuation, over long periods of time, the stock should make about 15% a year. That's basically what you're looking at there. Make sense? Because it's also about how much money you're returning on your debt and your or maybe it was the total equity. It was something like that. Oh, that's what it was. It was current debt plus long-term debt plus shareholder equity is the denominator, not just the debts. It's current debt, long-term debt, and shareholder equity. And the reason being is that's how your capital structure is determined. You take your debts and your equity, and that is how you get capital into a business. You can either borrow it or you can put money into it, which is equity. And so you're trying to get the return on that capital. Does that make sense?
For me, absolutely not. But if you're out there and that did make sense, congratulations. I love you. That was ENVA, ENVA, Enova International. That was a good take on that, Paul. It's been in the news, and maybe we can look at the 10K for you patrons here. Do you want to keep going?
David asked the question. David Los. Can you pull that one up, Don?
How far up was it?
I see it. Would you compare your way on analyzing stocks with how Buffett does it? And if so, do you think your way is better?
No, I don't think my way is better. I think my way works for me. Buffett is the god of value investing. There are people out there who've done better than Buffett. They're just not as popular as him. I do think that I like my method. It works for me, and I understand it. And I'm probably not going to beat. I think it's possible for me to beat Buffett's returns using options.
Yeah.
I'm sure he uses options with his portfolio back in the day, but he's so big now, it's very difficult. Buffett is the be-all, end-all of all value investing. He understands things that I would never even try to understand. And he also made a lot of money because he used insurance company float, which is the money you pay. When you pay your insurance bill, they expect to pay that out. When you pay $1,000 in insurance, they're going to expect that insurance to cost them $1,000. The difference is they think it's going to take years to pay out that $1,000. So their goal is to take that $1,000 today and invest it, and while they're waiting to pay it out, they get the profit. So Warren Buffett was able to make a lot of money doing that. It's basically a free form of leverage, essentially. I just like my method. It works well for me. I do think I'm going to get 15 to 20% returns on everything I do. Real estate and stocks. Businesses, I'm going to get much higher rate of return. But how sustainable is it? I don't think I'm going to be able to get to $50 billion and get these kind of returns that Buffett's gotten from 50 billion to 250 billion or whatever the number is. So I just like my method, and it's not about being better or worse. It's about being comfortable. And I'm okay making less than Buffett if I understand what I'm doing. That's the difference.
Don, are we frozen over there? Are you okay?
I'm fine.
Okay, we're good on our end. Okay. Let's do this. Let's look at Paul. Do you want to take any questions or do another stock? I have plenty of stocks. We could go till the cows come home.
Let's take some questions.
Okay. Goldie, I'm going to get to yours. Our next stock we're going to do is we're going to look at Trimble.
Oh, we want to know Intel. I did promise somebody
I want
Intel.
to do Intel, yeah.
Yeah, I did promise somebody Intel.
Okay.
Let's do Intel.
Let's do Intel. Okay, we'll get to Trimble. That's an interesting one.
I thought we were going to take questions.
We'll get to it. We'll get to it. You want to do Intel now, or do you want to take some questions? Sure.
Let's do Intel right now, then we'll take questions.
Okay.
So guys, you remember Intel? It's currently around $60 a share. I was a buyer sub 45. I bought a couple of them. I sold puts on it to get a couple of buys. Everybody tells me that Intel's dead. I love hearing that. I don't think they're dead. They just did lose Apple though, correct? They did just lose Apple, so you got to factor that in. $250 billion market cap, PE of 11.7, check mark there. Profit margin of 27%, check mark there. They still have very good PE and a very good profit margin. Now remember, this PE might be so low because people think, oh, they're losing Apple. And usually what happens is when it's a massive sell-off, they probably sell more than they should. Remember, this company literally was $45. I lost the shares to a covered call at $57.50. So that's why I don't have the shares anymore.
Bogdan's saying they didn't lose Apple. They lost part of Apple. I don't know the deal. So.
Oh, really?
Oh, you know what? I think they lost their mobile phone,
which is a
chip,
big number.
But I think they're still using it in their computers, or vice versa.
But didn't Microsoft? I don't know. The bottom line is, look at this, guys.
I think Bogdan's.
In the last 12 months, they've done $21 billion in free cash flow. They pay a 2% dividend. They've only spent 1/4 of that on dividends. So I like that already. And look at this. Return on assets, about 14%. So return on assets and return on invested capital can be pretty similar things. So this is all pointing to a very promising thing. Intel is all about the future. If you believe in Intel's future, you're buying it all day long right now. If you don't believe in the future, you're not buying it. That's literally it about Intel, because the numbers are incredible. The revenue growth, look at this. Dying company, 60 billion to 78 billion. Real death there. Last year, 72 billion to 78. This is the exact same conversation I had in 2012 about Microsoft. Paul, Microsoft is dead. Well, then why are they growing 11% a year of revenue? That doesn't make any sense. 8% a year of revenue. And since then, they've doubled their revenue, I think. So I was like, that doesn't make any sense. Profit, guys, we have net income, 10.3 to 21 billion. Okay.
Check, please.
Doubled. Shares outstanding? Oh, by the way, down. About 10%. About 15% of shares outstanding. Check mark there. Balance sheet.
Current assets over current liabilities is pillar number 6.
47 versus 25 billion. Check mark there.
Come on.
Cash flow statement. 12.1 to 20.9. Check mark there. And the price of free cash flow? Ready, Seth?
You're flying, baby. Okay, what is the free cash flow average? I didn't even get it. Did we even do that?
Ready? 12.2.
Thanks.
10.3. 14.3.
Wow, it keeps going up.
16.9. 20.9.
Yeah, geez Louise. Divided by 5, the average free cash flow is 15, Paul.
Times 20. Call it by times 15. That's $225 billion. What's their current market cap?
250.
Okay, so it's still a check mark at the 15 level, at the 20 level. But look at this, guys. Here's what you should do.
Jeez.
The reason I was a buyer of Intel sub 20 was because of their potential future problems. At sub 45, they're currently at $45. They're selling for $187 million, roughly. That's below, it's like 13 times the last. But remember one thing, their free cash flow has doubled in the last 5 years. So can you justify 20? You can. I really truly believe this company is all about the future. If you believe in the future of Intel, you are buying this all day. If you don't believe in the future of Intel, you do not buy it. The numbers just make a lot of sense. But remember, as a value investor, I want to assume that they lose a lot of business. I still make a lot of money. That's why my buy price was 45. And
it's currently at $63.
so remember one thing. Oh, it's $63 right now?
Yep.
Look at this, guys. Here's the best part. When everybody was telling me Intel was dead, 2020 wasn't over yet. People were saying it's dead. 2019, they did 17 billion. Last year, when everybody said they were dead, they did 21 billion in free cash flow. Huh. That's weird. So anyhow, I still like Intel. I do think it's a $75 or $80 company all day.
So every comment literally talks about AMD in comparison to this company.
Great, AMD, more power to them. They've been up and down. They are growing like crazy, but that also happened 15 years ago. Then they fell to the ground.
Yep. They're not new because they've been around for a long time, but they're kind of that sexy new guy on the street.
Like me.
Of course like you. Of course they got the, I think they got the PlayStation or the Xbox. That's the chip that it's being used. And Intel's, can I do the momentum real quick?
Yeah,
so
please do.
The thing about Intel, and you can see, this is the last 18 months, you can just see this thing. I'm actually surprised by this. It's all over the place. Look at these gaps just all over. It's very news driven. I think that this drop right here was when it was announced that AMD was going to get the Microsoft or the Sony PlayStation or whatever it's called. So right now with Intel, if you're playing this, you need to use stops. And you need to use stops because you have these big swings that, I mean, this thing's fluctuating $10, $15 a day in some cases. So if you want to do something right now with it, you can buy it. But again, it's in this overbought range. Make sure you know that what news is coming out on Intel. And I hate saying that from a charting perspective, but you kind of have to. This is the good thing about trading the same 5 or 10 stocks over and over. You learn their behavior. So with this, you'll be able to always look at when are Intel's earnings? When are they announcing something new? When is AMD announcing something new? That's why I always preach, trade 5 to 10 stocks and learn those stocks very well and learn their behavior. Learn the story that they tell. That's the best advice I can give you.
Yeah, a lot of negative thoughts about Intel and that AMD is the new awesomeness. It's saying Intel's not dead, but they need to innovate. A Bitler saying to have a blockbuster product in that AMD got Xbox and PS5.
Yep,
and that's fine. Like Paul said, AMD was supposed to be dead years ago, and here it is back. So
no, Intel was supposed to be dead years ago because of AMD, and then it did. I'm
but
not
AMD is
saying
coming
those
back
aren't
in their form
concerns.
now.
Those are very valid concerns, absolutely. And that's where you have to sit there and say, at what price am I okay with Intel losing a lot of revenue and still being able to perform? I just did the return on invested capital of Intel, and it was 12.7%. Not bad, not good. It's better than the market. Not great. But remember one thing, it's also based on the last 5 years. I took an average of the last 5 years. The most recent data would have been over 15%. I'm going to look at let's go look at the quarterly income statement. Quarterly revenue. Okay, there's a drop there. There's a drop there. What were the increases then? That's where the increases were. The first 2 quarters of the year. Okay. So they might be dropping a little bit, but it wasn't a big drop. A couple percentage points. It's something to watch, guys. This is why value investing is great. Pick a price that you want to buy Intel at and stick to it and just wait. Sell puts, although the put premium is going to be awful on it, but sell puts on it and wait.
Yeah, the puts on Intel are very bad. I think I might have one. It might have expired in February, but those puts are so bad right now. You're going to collect 2% premium on them annualized. It's pretty bad. Sethwa?
Yeah, there's just so much flying around. We talk about a lot of companies, and this one is just, I mean, people are all just, the comments, Paul, are just pouring in about this back and forth, who's making the chips, who's got the contracts.
And surprisingly, Spicer is actually being calm and saying, guys, this conversation is focusing on the wrong thing. No one's saying Intel's going away. He's absolutely right.
That's correct.
That's exactly it. I'm just sitting there saying, how much will Intel lose to AMD, and what am I willing to pay for that? That's it. Remember, the value investing world doesn't care if a company is dying or growing. What it cares about is how much you're paying for that death or growth. Something that's dying is still worth something. A steady stream of income, a steady stream of cash flow that's decreasing is still, I'm going to pull this up all the time. If you have free cash flow of 5, 4, 3, 2, 1, then dead, it's still worth something. Is this worth more? Yes. This way is worth more. Absolutely. But it doesn't mean this is worth nothing. You're still going to get $15 in 5 years. You should still be willing to pay, even paying $7, you're still going to make north of 15% a year. So why not take it? That's the point about value investing, guys. What I'm trying to remember for you guys is trying to teach you guys is take the emotion out of it, which we're all guilty of, even I do it, and look at the facts. And the facts are that Intel does have headwinds. But guess what? That's what makes it a value play. Very rarely are value plays have a great story to it. Of course, there's going to be a problem with it. That's what makes them value plays, is that the market discounts too much the bad news. That's what we're trying to figure out. Is Intel a value trap or is it a value play? I think it's closer to value play than value trap. I haven't done enough due diligence to figure out how much AMD is taking away from Intel. And then I can sit there and let things, but I will say that I liked Intel sub 45, bought the shares sub 45, and still did well.
Are you writing options on Intel?
Only problem with Intel options this far out of the money, like I want to buy it at 45, the premium's terrible. Like I'll show you right now.
Okay. I mean, the other people are saying, why don't we just pull up AMD right now and look at it, Paul?
Oh, AMD is the best. It's such terrible financials.
And people are saying, why are we pretending that NVIDIA doesn't exist as well? So maybe we could look at these companies. I mean, this is hot sauce here right now. People, I've never seen the comments fly in. It's
Yeah,
like,
NVIDIA is a good company. I mean, they make great chips. I think they might be in the Tesla. I know they're in the Range Rovers.
More in the graphic cards.
Oh, okay, graphic cards.
Okay,
there you go.
NVIDIA, guys. Sorry, AMD.
AMD, here we go.
$100 billion market cap. Okay. PE of 40, 39x. Good profit margin, 25%. Check mark. No dividends. And a free cash flow in the last year of $770 million. So right now, the price of free cash flow is 120 or so to 1. Versus Intel's was 13. So, again, not even 13. On the last year, it was, what was the market cap, 250?
Yeah,
Divided by 20, it was 12.5, so it was close enough. So the question becomes, is AMD worth 10 times the premium that Intel is? That is the question we're trying to ask. They made $777 million in free cash flow last year, AMD. Intel did 20 million. That's 20 billion. That's 30 times more. So according to this, market cap of AMD should be $3 trillion. Sorry. Wrong. Intel's, to get the same valuation level, has to go from 250 billion to $7.5 trillion at the same valuation level. Again, AMD probably has a better growth story than Intel, but it's all about the valuation at some point. Let's go to the income statement. Look at their revenue, much faster. 2.1 to 3.2. Okay, it did fall quite a bit and then grew. So it is a check mark there. Net income, 170 million to 1.78 billion, check mark there. So this is about in line with where Intel, they lost their revenue, but AMD has really jumped up here in the last year. Yep. Next, shares outstanding,
Pillar
increasing.
number 5, yeah, pillar
Pillar
number
number 5, shares outstanding are increasing, not by much though. Balance sheet, cash on hand.
Current assets over current liabilities.
6 billion versus 2.4. The great part about AMD, they only have $3 billion in total liabilities. They have more cash on hand than total liabilities, which I love, but not enough to move the market. They're going from a $97 billion market cap to 95 there. Check, please. Now, free cash flow.
Free cash flow, pillar number 7.
Negative 34, negative 101, negative 129, 276, 777. Check mark there.
Do you want me to count all these negatives? I mean,
Yeah, count the negatives.
Same again.
Negative 34.
Thanks.
Negative 101, negative 129, 276, 777.
You know I'm gonna blow this. I mean, this is. Yeah.
Okay, so I'm gonna do it myself. $1,050,000,050, 920, 820, 785. Divided by 5 is 160.
Great, I got 17 over here. That's what I'm talking about. I'm just an idiot.
It's like 155, sorry. And their current market cap is
100.
100 billion.
Yeah, 100 billion.
And their average was 155. I mean, what is this? 800 times? No, 80 times, I mean? No, 800 times? 700 times? 600 times? 600 times free cash flow in the last 5 years. Now look at this, guys. Again, you're right. AMD has a bigger growth potential. Their free cash flow over the last, they didn't have free cash flow for how long? 8 years in a row? 1, 2, 3, 4, 5, 7 years in a row of no free cash flow.
David's saying their new CEO is really great at her job. She turned the whole company around. Management is really good now.
Wonderful. It's still not worth that premium. You're 100% right. All those things can be right, and those are part of the qualitative aspects that we want to look at. But then why, if 100 billion makes sense, according to these numbers, then 1 trillion makes sense. Then 500 billion makes sense. You know, it's funny, I talked to Gary yesterday. He made a very common comment. He goes, listen, Tesla's overpriced. $800 a share, $900 a share before. He goes, I literally perceive $100 a share to be just as stupid as $900 a share. It's still insane. 100 billion is just as insane as 500 billion to me. This company could have ride momentum and skyrocket. Look at the stock price. I mean, it has gone crazy in the last 10 years. This was as low as what? $2 a share in 2015. Now it's at freaking $80 a share. Do it if you want, but the value investing side is on Intel, not on AMD. And I'm not saying Intel is not a value trap, but go understand how much AMD is actually taking away from Intel. Usually when people hear those things like, oh, they lost business, the stock just collapses. And you wonder, but how much business did they lose in order to lose $50 billion in market cap, et cetera? That's the question. And if I want to make another point here about Intel, when Intel was an unstoppable company back in 2000, the stock price was higher than it is today, $75 a share. And they said, Intel is the future growing company. It's the only chip maker. It's the best ever. And look what happened. It still hasn't reached that peak from before. Keep that in mind when you think about AMD, guys. AMD is the future. It's the future. Intel was the only chip company. AMD was around, but they weren't. And look, they still haven't even matched their 2000 high. Just remember that every time you think a company is unstoppable. Just remember that. My throat hurts. What's next?
I mean, I didn't know that all of you knew so much about this topic. I mean, the comments are just.
This got heated real quick.
Did it get heated?
No, I mean, I'm just
chips.
like, people have serious opinions on AMD versus Intel. My goodness.
Yeah.
And then, God forbid, we leave out NVIDIA. Oh my God.
Yeah, or TSM. What is that, Mo?
Oh my God.
You want to look at NVIDIA now, Paul?
No, I want to relax my throat.
Okay.
Why don't we take some questions? I like taking the questions.
Let's just calm down here about this computer chip stuff. And what's going on with Camping World, someone said. I have no clue.
Oh, Camping World is Marcus Lemonis.
Oh.
You know who Marcus Lemonis is?
The basketball player?
The Prophet on CNBC.
No, I don't. I don't watch a lot of that TV. Oh, by the way, Mo, do you know what these NFTs are?
I do not.
Paul?
They're pictures or something? What are these things,
What is
Seth?
it?
Listen,
Benjamin asked me.
Someone correct me here. From what I've gathered is like you can buy a tweet or you can buy...
Oh, is this the, what's his name? The guy from Twitter just sold his first tweet for $2.5 million.
Oh, my friend told me. My friend told me about this last night. He bought something for $200 and he sold it for $1,200.
Is this not a sign of the times, Paul, when you can buy tweets now? I mean,
Stupid.
And Seth, you know what I said?
Go on.
I said, please, it's digital, digital tweets or whatever.
Yeah.
But he said digital cards. And I said, please tell me that you can use digital currency to buy digital. And he's like, of course you can. I'm like, this is awesome. Sign of the times though? You're exactly right.
That's right.
You know what's sign of the times? I brought this up the other day. When Market Watch runs an article about kids and their secrets to investing, that's the sign of the times.
We had a guy, I had lunch with a guy yesterday. He told me that he doesn't do any of his own investing. He doesn't know anything about the market. He sat down with me.
He's a walking drunk, by the way. I hope he's watching it right now.
Yeah, he goes,
He won't remember.
He goes, do you think we're in a bubble? And I was like, yeah, I don't think we are. I just know we are. And he's like, oh, okay. Well, I took out $500,000 to start trading myself, and I'm up 130,000 in 18 days. I'm like, oh, that's pretty good. And he's like, yeah, I think this is pretty easy. I think I'm just going to keep buying these tech things, and I think I'm going to withdraw more than 500,000 from my money managers. And I'm just like, okay, everybody's a genius nowadays.
Now, I would say that buying art is not a new thing. You know, buying people's musical
of course not.
catalogs and art. So I guess they're saying
I have
that,
some
like,
nice pieces of art.
You do. So people are saying that like buying a tweet or something of that nature is not out of the realm of possibilities, but when it's people
Yeah, you're right. You know, digital stuff isn't easy to replicate and do different ones of. I mean, great, that's fine. I just look at it going, if a piece of art's on my wall and it's the only one in the world, I feel much more comfortable about that not being replicated.
I think that's what people are saying is maybe this scarcity is
What's the scarcity with technology? That's what I always say. People are like, oh, Bitcoin's limited. You're telling me that some point in the future, they're really going to limit the amount of Bitcoin that's out there? Come on, guys.
And I heard that
just like money supply is limited to gold, and I got rid of that.
I've been hearing that Bitcoin is limited for 5 years now, and it just keeps. I mean, clearly we're making more, right?
The gold standard was about keeping money in supply just to gold. So I'm sure there are people back then saying, well, we can't increase the money supply too much. It can't surpass the gold. To which Richard Nixon said, hold my beer, and he got us off the gold standard. So it's like, come on. If there's a will, there's a way. They will figure out a way to make more of it. That's just the way it always works.
Maybe, yeah. Someone said this is a deep rabbit hole, and I don't know if I should have opened the door here because it's bonkers. But I
think it's interesting. That's right. Interesting. Paul does not understand blockchain.
That's true.
Nor do I care. But somebody asked, am I willing to buy more art? I do like to buy art, but the one thing I don't do is I don't buy art hoping it goes up in value. I see something I like, and I try to get a good deal on it, and that's it. I bought rare pieces 14 years ago. I know they've gone up a ton in value. I don't know, and I don't care how much. All I know is if I want to sell them tomorrow, I can get my money back very easily.
So people are saying, yeah, I just bought AMD with Bitcoin. Other people are saying, of course, Paul, you're so stupid. Bitcoin is capped at 21 million. And my question is, are you sure about that?
That's the point I'm trying to make is...
Who's saying? I mean...
Yeah, it's capped by a
computer. Where are the rules? You people are buying into this. I was one of those peoples. You're buying into this. Where's the rule book, and can they change it?
There's no regulation. So how is it... Who decided it's capped? What, if they go over 21 million, that's breaking the law? You're going to get arrested?
You know what I'll tell you is capped? A Van Gogh, a Picasso, those are capped. My signed art... It's funny, I keep finding more and more signed security analysis by Warren Buffett. I'm not trying to be morbid here, but he's 90, and I'm looking at going, do I just buy a few of these and hold on to them? Because I have to think over time. I mean, if you want a Graham or Dodd signed security analysis, it's way more than a Warren Buffett one. I just look at it going, maybe I should I look at things that are actually finite. At some point, we cannot get Warren Buffett to sign more books. That's just it. So I look at that going, okay, I can't get Picasso to go make more art. Anybody know why? Picasso's dead.
Well, this is interesting. Someone said just because the Modern Monkey said just because it's a scam doesn't mean you can't make money on it.
We didn't say you can't make money on it.
Yeah, that's true. It's just people are saying there are rules of Bitcoin. Somebody send these idiots the white paper, technical constraints. I guess you guys can think whatever you think. This is certainly our opinion, but I heard a lot about this when they were doing online poker in the 2000s. I had friends quitting their jobs and leaving college to go play poker because they could make so much money. And then one day later, the government regulated it, and it all vanished. It just went away. So I guess if you believe all this, have at it. We love you.
And if you think the government is not going to find a way to take some big part of Bitcoin or whatever this crypto, you are crazy.
The Treasury already said they're going to create their own blockchain. To which I say, fine, I'd rather have that than Bitcoin.
Mm-hmm. I mean, we could go on about this forever, but yeah, we do look very foolish. We do look very foolish when it comes to Bitcoin folks. So, yeah, poker sites weren't decentralized. Yeah.
Are people signing up for our...
I don't know. We haven't even talked about it.
We haven't even pushed it that hard.
Yeah, it's funny.
Let's do the push.
The push.
Guys, there's 8 minutes left in this, and I'm going to do the push now. Hey, could you find me Mattia? Hey, Don, when Mattia puts up their website for their art, can you write it down for me?
Benjamin's saying an NFT sold today for $70 million. I guess the point.
Come on.
I guess the point is
it's always something new. By the way,
it is.
Just as new as this is, it'll be replaced by something else. You don't even remember what this is. That's the point. Guys, everythingmoney.com. It was $14. Now it's $16. If this isn't the best value play, you are getting the Discord. That's the biggest part of this. As much as I love the software, the Discord's the biggest thing because it's the community of investors. Uncle Don has done a great job of creating different chats for your own group, plus for every different sector you want to talk about. Every single person who's in the Discord, except for the literally 0.5% who've canceled, love it. They say it's the best investment. It's $16 a month, guys. You will get the Everything Money software and every update in the future. When this thing goes to $49 a month, you're still going to be paying $16. Now, granted, I will have small increases along the way for cost of living, but it's not going to jump up to $49. You get all of these things: stocks, real estate, momentum trading, screeners. We're going to be building all this stuff. This is a main focus of our entire channel for the future is our Discord and our software.
Let me cut you off right now because we are giving away 2 Tesla brand new Model 3s this year. The grand Tesla promotional video, Uncle Don, comes out tomorrow. You better check your pants when you watch this video. It's hilarious, and you will see the full awesomeness that is our Tesla giveaway. If you're in the States and you win the Tesla, we will have you in our Cleveland studio here in Akron, and we'll go pick out the damn color ourselves. It'll be incredible. Make a whole show out of it. So the patrons, you're automatically entered in this ridiculous Tesla giveaway, which is probably infinitely times more bigger than any other giveaway for a show of this magnitude and only 23,000 subscribers. This is completely absurd giveaway in comparison to the big boys out there.
And for everybody who thinks this was $8 just a month and a half ago. $8, it's already doubled in price. Would you have rather had it for 8 or 16? This will be double the price at some point. We have 1,400 users right now. Our goal is to get to 50,000. Guess what's going to happen between 1,400 and 50,000? This price is going to keep going up and up and up. And I guarantee it will actually surpass $49 because look at our competition, guys. $199, $199, $35. Just Yahoo Finance just to get financials is $35 a month. This is a crazy value. It's insane, and you get the Discord chat. The only thing you get in Yahoo Finance is the comments below, which are by a bunch of idiots out there. Now, no offense to anybody who's commented below. I actually go to Yahoo Finance to have fun watching their comments.
I love the comments.
Isn't it great?
That's why I go to Yahoo Finance the most.
To see the comments. This is your Discord community. This is it, guys. Trust me when I say we have so many people of wide ranges of age and income. We have one person in our big chat who makes $4,000 or $5,000 a month on options that they learned from us. Do you think they're happy they pay
$8 or
no, $250? That's the highest level.
If they're in Canada and they win, Paul, can they
As long as you can get a Tesla in Canada, we'll get it to you, or you can get it cash, $37,900.
So I saw a frowny face, or and you're incorrect. We'll get you the damn car, or you get the money and you go buy the car, or blow it all on Bitcoin and or Hetzcoin or Dogecoin or Ethereum or NFTs, all that great stuff. You can blow it all, or you can trade it with TraderMo in the morning.
Yeah, that would be good. TraderMo in the morning.
All right, guys. I love you. I think that's the show, Paul. An hour and a half. You've done it. Your voice is frogged, and just make sure you fondle that thumbs up on the way out. As Mike said, one of our patrons just said, fondle the thumbs up. Paul, you don't like to cuddle though too much, do you? I mean, you and Paula, you guys cuddle monsters. I mean, you cuddle.
I like to cuddle
in the morning. You cuddle, and
I mean, I don't want to get into that, but I just, I'm just, I like to, okay. Moving on.
You like the touch of a woman when you're watching TV, or you like to sit separate? Like
I like to sit next to them.
Will you break wind in front of Paula yet?
No, I will. I never broke wind in front of Lisa.
Never.
Refuse to. I will get up, leave the room, spread those
Step
ass cheeks
outside.
apart, and let it go. Excuse me, let me ask you a few questions.
You mean didn't ask?
You know what that's from, though, right? Ace Ventura, that's right. Excuse me.
So you have to like excuse yourself. Do you go all the way outside or another part of the mansion, or like where do you?
I go to the West Wing.
The West Wing. You just let it fly.
I stop for a quick drink on the way, just so I can relax and rest.
But what's your explanation for going farting in the other room?
I gotta go to the bathroom.
Oh, okay. So you just announce it.
I just say I gotta go to the bathroom. That's it.
Okay. I mean, that's not that sexy. I mean.
Okay, I need to use the restroom.
My point is, you don't make some excuse like I have to take a phone call to go fart in the West Wing.
No, because I just say I have to go to the bathroom.
Okay, Bumblebee Tuna, you got it, guys. You're bidding ass.
I love being Little Spoon, Peter.
Yeah, me too.
Love being Little Spoon. Are you kidding?
I don't like this big spoon.
I'm not embarrassed by it. I love being the Little Spoon.
Yeah.
Especially when I start sobbing and they start like, it's okay, Paul. It's okay, Paul.
They console you.
They console me as I'm sobbing uncontrollably.
You don't sleep naked, do you?
No, I do not. I wear a shirt and everything.
Oh, you wear a full shirt.
Yeah, I wear like a suit and tie and shoes.
I'm just picturing the dad right now from Lost that walks around in the woods in a white suit. That's how Paul sleeps.
That's true. Look at this. Paul bought a big house just so he could fart away from people. That is 100% true.
Charting farts.
I will say this though, when my dogs are like on top of me,
What's going on?
and they're like playing with me, I do fart just to see if they'll move, and they don't.
Yeah. I mean, so do you plan when Paula arrives? Are you planning your diet? Are you having tacos or chili the day before?
She wants Chipotle.
Uh-oh.
She loves Chipotle.
So
but we're going to dinner with you and Bethy on Sunday.
Yeah. Well,
To a nice spot, because of course
that's nice.
everybody picks nice spots
When you're
I'm
paying. I'll pay Sunday.
No, I'm paying. That was a joke.
That's nice.
Then Saturday I'm going to dinner at Kenny Stew's with Mikey and Meg.
I'm going.
Oh, you're coming?
Yeah.
So why wouldn't you come with Paul, with Seth and Beth?
Because it's different at Gervasi.
No, it's not.
You're
Yes,
telling
it
me.
is.
So you're telling me in the Little Spoon, what happens?
Yeah.
What happens if you're getting Little Spoon to this weekend and you break wind?
I'm not gonna break wind.
It could happen.
It won't happen.
I like Mason's idea. We should go to Bob Evans.
First off, Mason, Paolo wants to actually see you, and I said no. So
Oh, I tried Mason.
I think our,
Mason's disrespectful unless he needs something from me,
I
like
think
a
our
free trip to
views-
Mexico.
I think our views are going up at this moment. This is
No, we're
forget,
down.
Forget AMD and Intel.
Fart is a crypto. That is true.
Yeah, so Paul will be selling his farts as NFTs moving forward.
The new
That's a
top
good
group of the
idea.
Patreon would be called Paul Super Poops.
He's an angry elf.
Yeah, Rodrigo, we did Qualcomm today, and look back. Yeah. All right,
You know,
guys.
I find it funny that Mason can make fun of my height, but I can't make fun of other physical attributes that Mason may.
We make fun of a lot of things about Mason.
I don't make fun of a lot, everything.
Paul, are we gonna do daily vlogs? We have so much planned for this channel, guys. We're doing way too many videos in comparison to other. We're doing so
We're
many
not
videos.
doing too many videos.
Maybe they're not doing enough videos.
They're not doing enough videos.
I see.
We have so many things to discuss. We haven't even added momentum. We haven't added real estate really yet.
I think one day we're gonna have a videographer just following us around, watching these talks. I mean, we get into these same conversations when we're driving to Wendy's, and we'd love to document a lot of this, especially for our patrons. Let's talk about farts for another 20 minutes. I mean, I'm just wondering, Paul,
I got a call soon.
okay, so you got to step out of the room and go fart in the West Wing. Great plan. Okay, that's the show, guys. Stocks and farts. We love you. The old Bidnass Nation. We love you guys. Check out the Patreon if you haven't. The price is going up. Don't lose out on that. And we thank you for your support. Paul, I thank you. Mo, thank you for the trading. Join
you, Seth.
Mo in the morning at 9 a.m.
Thanks for
before
hitting
the bell.
400, guys.
9 a.m.
Sign up
Monday.
for that Patreon. Don't be stupid.
Thanks for the support. Have a great weekend. We will see you next Tuesday, Goldie. I got you, baby. We'll do a whole video on Tremble. I love you. And we're out of here. I'm going to crop dust the whole studio on the way out. Let's go, baby.